The deadline for the first of many ETF applications is fast approaching, and with that, Bitcoin is soaring upwards in anticipation. In today's video, we're going to be discussing the 3 possible price action scenarios moving into and after the ETF deadline on the 10th. Let's go ahead and get stuck in. Okay guys, welcome back to the channel. Thank you for tuning in. I hope you're all having an amazing day today. This will be known as one of the most significant events for cryptocurrency and Bitcoin in the history of this market. We have the first of many ETF deadlines fast approaching, and within the next 36 hours, we shall hear one of 3 different outcomes. In today's video, we're going to be discussing these outcomes and we'll be assigning possible price action scenarios based around these outcomes. Alongside this, we'll also be doing a short-term analysis discussing the current explosion in price projections, and doing a complete macro analysis as we are approaching a major high time frame resistance. Before we do get into it, smash that like button, hit that comment button, and subscribe to the channel. We post daily videos of Bitcoin focusing on the facts, the data, the technical and structural information. No hype, no BS, no emotion, pure raw TA. If that is the kind of content you are interested in, join us on Telegram. It is the 3rd link down below. You will get access to charts, updates, videos, educational posts, news events, and everything you need to stay in the loop of cryptocurrency with Bitcoin and the relevant economic news. If you were interested in trading, you can join our VIP group. We post trading setups with exact entries, exact targets, exact stop losses, trade justification, exclusive analysis, and so much more, guys. You'll get access to all of this, including access to our group chats, our trading chart and education chat, our general chat, our news chat, our trade setup, our daily video, and our help chat. If you're interested in getting access to all of this, go ahead and contact me, guys, in the pinned comment of the free channel for more information and to view our entire trading track record since February 2021. Without further ado, let's get stuck into it. Starting on that market data, how are we looking for today? 24-hour volume has seen a nice surge of 90%, sitting at a total of $158 billion. Looking at 24-hour liquidations, we are sitting at a total of 276 million. This is up 113% in the last 24 hours. With that 276 million, 120 have come from long positions and 155 million have come from short positions, as Bitcoin saw an explosive move toward the upside, perfectly retesting this level of high time frame resistance, the level of high time frame resistance we had been expecting ever since we broke of 32k. We've been telling you the next high time frame level of resistance from 32k is that 48 to 46k range. We have now finally come up and retested this resistance. We'll get into a lot more detail about why this is important and what we expect from this level in just a moment. Moving over from there, taking a look at the volatility index, we can see on the 30-day period, the volatility index is more or less moving sideways still. On the 60-day period, again, the volatility index is still moving sideways. It does take quite some time, for the volatility index to adjust for short-term moves, and we do expect the volatility index to actually increase as a consequence of the recent surge in Bitcoin's price action over the last 24 hours. Let's go ahead and jump over to the DXY. The DXY has broken out of its multi-month downtrending diagonal resistance. However, like we mentioned in our prior video, the most significant thing for the DXY is not this trend line. It is going to be the upcoming economic data, specifically the core and normal and our core inflation, our inflation data, and PPI data. This is going to be occurring within the next 72 hours, all of these events. Again, if inflation does come out bearish, meaning inflation has risen, we could see the DXY continue upwards. However, if we get data that inflation is continuously falling, that is going to feed into the narrative, the Federal Reserve did set, which is they're looking to reduce interest rates moving into 2024, the first few months, which could actually send the DXY back down, resulting in a failed breakout of this resistance and the downtrend continuing. So definitely pay attention to that. We're not looking at this from a price perspective too much right over here, as the main drivers of what the DXY is going to do is still pending, and that data, which is so very much important in regards to the direction of the DXY, we don't have access to yet. Let's go ahead and jump over to the S&P 500. So we did see a little bit of a rejection from that upper level of resistance. We had the deviation above that level pushing back down, resulting in a short-term downtrend developing. However, it does look like we are now retesting this level of resistance again on the weekly candle. We do need to clear this level of resistance to continue that uptrend upwards into price discovery. If we do break through this level, we are looking at a price target of around 5,000. If this does not break and the data for the inflation comes out bearish, we could see the S&P 500 tumble back down to retest 4,600. However, it doesn't really matter what happens to the downside, provided we remain above 4,600, which is going to be the confluence point between this local level of support as well as a downtrending diagonal resistance. We are very much in an uptrend for the S&P. Looking over to the Dow Jones, a very similar price pattern over here. We're looking almost identical, so we're not going to go ahead and show that. In today's video, guys, before we get into Bitcoin, we are going to go ahead and outline the ETF. And the ETF decision is coming up in the next 36 hours. This is going to be the first of many ETF applications that are set to be potentially approved over the coming months. This is the ETF deadline over here. If you want a more detailed copy that you can actually copy, head over to the Telegram channel, scroll up, you'll be able to see it right over here. So you can see we do have that first final deadline, which is going to be for the ARK 21 shares Bitcoin ETF. This is going to be actually on the 10th of January, which is in about 36 hours. What does that mean? That means the 10th is the final deadline, meaning the ETF could be approved, rejected, or delayed anytime between this very second until the 10th of January. Now, the ETF narrative has been going on for a very, very long time now, which has accentuated Bitcoin's move toward the upside. I said in a prior video, Bitcoin would have continued upwards even if the ETF narrative didn't exist, as the reason the price action flipped the macro trend into an uptrend all the way back at the start of January was due to the fact that inflation topped out and interest rates plateaued at their highs. The narrative that then developed initially in the early phases of 2023 was that interest rates were going to continue down and potentially move towards a pivot at some point at the end of 2023 or even 2024, which was later confirmed in the later months of 2023. We have to understand what drives asset prices on a macro scale is not news such as ETFs. This can accentuate and kind of speed up the process, give it a bit of a kick, but it's not going to determine the overall macro direction of Bitcoin. We have to understand the ETF narrative only helped Bitcoin continue up aggressively and much faster than expected, but did not actually set the trend for Bitcoin. So that means two things. Number one, if the ETFs get declined, we are unlikely to see Bitcoin suffer a significant correction that will result in the uptrend that has been established over the year break. And therefore, if we do see that, I would not expect Bitcoin to lose 31,000. This uptrend has been built on so much more than just the ETF narrative. We have to keep that in mind. When the ETF narrative gets blown out of the water and it's all done and ETFs have been approved, the price action is still going to be moving and the ETF narrative is not going to exist. Just as the price action moved before the ETF narrative and the ETF narrative didn't exist. Okay, so a lot of people are putting a significant amount of weight on the ETF narrative in relation to Bitcoin's price action. We have to understand there are multiple macro drivers of price action, not just the ETF narrative, although at the moment it is the predominant narrative in terms of a social perspective for the asset market. However, it is not the primary and not the only. So if we do see a rejection of ETFs, yes, it is going to be bad. Yes, we are going to see a correction. However, It is unlikely the or should I say the yearly uptrend that has been founded on not just the ETF narrative will be broken. Keep that in mind, guys. If we see a delay for this ETF narrative, or should I say this particular ETF approval deadline, it is unlikely we're going to see all that much of a correction. We might see some short-term volatility at best, because again, the reason the price action is going up aggressively in the short term is an anticipation of an eventual ETF approval, not so much at the exact date of the approval. Remember that it is not the date that matters, it is the notion that ETFs will be approved that actually matters. And of course, if we do get an approval, we're going to see a whole bunch of volatility in the market, and we could see anything really happen. We'll discuss that in just a moment. So in today's video, we're going to be going over the macro charts, the short-term charts, the high time frame, everything. We're discussing absolutely everything you need to understand what is going on. Before we get into it, quick word from Bitget and BingX, we'll dive in. I wanted to briefly interrupt today's video to discuss the two exchanges we use on this channel, Bitget and BingX. So which exchange should you sign up to? If you look to the right-hand side of the screen, you're going to see the list of differences in relation to KYC requirements and the countries these exchanges offer services to. The first link down below being the Bitget link, and the second link down below being the BingX link. No matter which link you sign up to, you're going to get up to 15% discounts on your trading fees, up to $5,000 in trading rewards, and of course, you'll get access to every single MegaWhale exclusive bonus campaign we run on these exchanges. Alongside that, Bitget and BingX are incredibly similar. They are both ranked top 10 in terms of trading volume. They both have extensive liquidity pools and market pairs offering up to 125x leverage. And most importantly, they both offer protection funds for their users to protect you against any third-party hacks. So get started now and support the channel by clicking the links below. Thanks for listening. Okay guys, let's dive in. So a bit of a long intro there. We have to talk about a lot of things. Bitcoin has seen a significant move toward the upside. This move has been perpetuated upon the announcement that we have heard from BlackRock and a few other large investment funds that they're actually set and come out and told us what their rate is going to be for the ETFs. And actually pretty sure they came out and said it was going to be sitting at around, here we go, 0.2% for BlackRock, which is actually surprisingly low for an ETF, rising to 0.3% when they have 5 billion in assets in the fund. So with that news event, which with this announcement, people are becoming more open to the fact, or should I say, realizing more frantically that ETFs are very likely to be approved. And with that, Bitcoin has seen a significant break over that short-term major resistance at 44.2k, breaking toward the upside and reaching that 46 to 48k range. Taking a short-term analysis, we take our measured move analysis of this range from the low point to the high point, apply it to our perceived breakout point, which was the 42.4k. We can see the measured move analysis takes us directly to 48,000. As we can see, the price action is sitting at 47,000, which is smack bang in the middle of the 46 to 48k range. If we go ahead and zoom in a little bit, we can see, guys, we are establishing some bases of support on the smaller time frame. The prior level of resistance that we broke through, which is the 45.5k level, is now going to be an established level of support. This level of resistance that we challenged for a few days in early and late December, early January, late December, is now going to be acting as a base of support just below the 46k range, meaning for us to see a correction sub 46 that will result in a short-term correction downwards, we do need to lose that level of support, which is sitting at 45.5. So we'll go ahead and adjust our annotations over here. We can drag this one across and we can change this one to short-term support. Okay, short-term support, and bearish trigger. So we are watching for a breakdown of that level for a potential continuation back downwards into this range, retesting our base of support at 44.2 and our POC level. If we do see a correction, we'll be seeing something like this, confirmation of a continuation lower and then correction toward our support levels. Until then, we are now sitting within a major high time frame resistance and a short-term level of support below us. This is an ideal position to be in moving into the ETF news, guys. If we do see the ETF approve, we are very likely going to see a large and quick move above the 48k level of resistance. If we zoom out to this chart, we can see the 48k level of resistance is basically the final level of macro resistance for Bitcoin until we move into this huge range of volatility and our VRPV significantly drops off until around 64k, guys. This is actually a very, very important level of resistance. We had a whole bunch of resistances in these lower ranges that we cleared through. We cleared through these resistances, and this is kind of that final level of yearly resistance we need to break to officially enter this bull run territory that can facilitate a move back upwards to the prior all-time high. However, it is not that cut and dry. This level, being a key macro trigger level, is of course a very strong high time frame resistance, and we could definitely see a liquidity grab above this level moving into the ETF news. We'll discuss that in just a moment. So what I'd be looking for is, if we do see a break above this level, I would love to see at least a monthly candle close above 48k to actually validate the close of this resistance. At least we need to see a weekly, but I would love to see a monthly close. Anything lower than a weekly close, we could see a liquidity grab up to potentially 52,000. The reason I say 52,000 is because if we look at the VRPV, we can see a divot in the VRPV right at around 52,500. This signifies at this point, we do have an area of liquidity that could be tapped and turned into a level of resistance as the VRPV slightly increases from this level, which suggests that from 48k to 52k, we have reduced amount of resistance, while above 52k to 58k, we have an increased amount of resistance. A reduced amount of resistance means we require less volume to push through and close, while an increased amount of resistance requires a greater amount of volume to continuously push the price upwards. So if we do see a strong move upon the ETF approval, I would be expecting a move to around 52 and change, 52.5, 52.4, 52.7, around about that range, guys. So definitely keep your eyes on that and keep that in mind. Now, moving over to the macro charts, guys. If we look at this chart, this is going to be our monthly chart, specifically focusing on two key areas. That is going to be, number one, the dotted trend line, and number two, the vertical green trend line. The vertical green trend line actually indicates the halving event for Bitcoin, okay? The halving event for Bitcoin historically has been the moment we enter the next phase of the 4-year cycle, which is officially the bull run phase. We explained it in our prior video. We have 4 years within each bull run, and we have 3 phases within each 4-year period. We have the top to bottom, which is going to be the bear market. We have every bit of price action that occurs from the bottom to the dash trend line, and then we have all the price action that occurs above the dash trend line. This is going to be accumulation. This is going to be bull run. As you can see, the price action is still in the accumulation phase according to the 4-year cycle, which is sitting underneath the dashed trend line. The dashed trend line is the 48k resistance, and thus a monthly candle close above the 48k resistance will result in that continuation upwards. However, there is one thing we have to be very aware of. According to what we have seen in the past, we never saw the dash trend line, the 48k relative resistance, break until only after the halving event. We can see instance 1, over here, we can see instance 2 over here. That tells us two things can occur. Number one, we could see the ETF approval result in a strong liquidity grab over the dash trend line like we saw in 2019, only to then see a short-term correction moving into and past April, where then we would break above and continue upwards. Or number two, that we would see the early breakout of the dash trend line based on the ETF news, and as a result, actually, for the first time, close a monthly candle above the dash trend line prior to the halvening, which could result in a shortened 4-year phase, or should I say, a earlier bull run. That would throw the projections of the 4-year cycle, or should I say the third wave of the 4-year cycle, out of the window and could potentially result in an earlier top. Keep that in mind, guys. In today's video, guys, we have gone over absolutely everything you need to understand ETF news. Again, we've gone over a few different price action scenarios. On the short term, really quickly, we are definitely bullish. However, keeping in mind that we are bullish, you have to be aware we are approaching a high time frame level of resistance. We've gone over the significance of this resistance level. We've discussed what could happen if the ETFs get denied. Although the probability of an ETF denial is so low right now, guys, it is very, very likely we'll see ETFs approved. The worst case scenario is a potential delay, and we've already discussed that delays will hardly lead to anything but short-term volatility, okay? If we're taking a look at 48K level, this is the key level we do need to break above to send the price action on that next macro leg upwards. So resistance is resistance until it is not. In history, we have seen rejections from this level, and we are not expecting a breakout of this level on the monthly chart until at least only after April 2024. An earlier break of this level will result in an earlier start of a bull run, which could translate to an earlier bull run top. On the short-term price action, if we do see a correction that takes us under 45.5K, expect a short-term correction that could take us back to the range high of our prior horizontal range. However, until then, we are in an uptrend and we are expecting the price action to continue back to retest 48. Thank you for watching, guys. I hope you have a fantastic day. It's going to be a very exciting time over the next few days. Our next video will actually be on Thursday, which will come after the ETF decision, and we'll have so much to discuss then. Hope you have a fantastic one. We'll catch you guys later. Cheers.